All right, well, hello everyone. I'm Jason Rainbow, senior staff writer and head of business intelligence at Space News, and welcome to our discussion on the space investment horizon. It's a discussion that couldn't be more timely, and there's plenty to talk about because after a difficult stretch that left valuations near record lows last year, it seems confidence is back in space finance. Analysts are pointing to growing activity across much of the industry from an increasingly diverse mix of investors, despite all the macroeconomic uncertainty that's still out there. Yet, amid this bullishness, there are still questions about valuation, discipline, sustainable growth models, and the interplay between government strategy and commercial opportunity. We're going to unpack all of that today with a fantastic panel of experts. Joining me are Mark Boggett, CEO and general partner at UK-based Seraphim Space, an early-stage investor with a portfolio of around 147 space companies across 32 countries. Kirk Konert, managing partner at AE Industrial Partners, a US-based private equity firm on the other side of the investor spectrum, which has made investments in companies such as Redwire and Firefly Aerospace. We have Theresa Condor, CEO of Spire Global, the publicly listed small satellite operator that recently sold its commercial maritime tracking unit, freeing up capital to focus on its weather, aviation, and radio frequency geolocation data businesses, as well as its hosted payload services. And Masashi Sato, co-founder and chief strategy officer at Japan-based nonprofit SpaceTide, where he's helping shape the country's expanding space ecosystem through entrepreneurship and policy collaboration. So a great mix of expertise and backgrounds to draw from. And we'll also be taking questions from the audience. So please drop them into the Zoom Q&A box at any time, and we'll get to them near the end of this webinar. But before we dive in, special thanks to ST Engineering iDirect for sponsoring this webinar and bringing us together. We'd like to start off with a quick video from them.
Step inside Intuition, iDirect's advanced ground system designed to change the way networks are built and run. With a virtualized cloud-native platform, you can scale services faster and deploy with greater agility. Automated orchestration streamlines operations so satellite operators and service providers can save time and boost productivity. Intuition supports multi-orbit networking so you can deliver integrated services and stay ahead of the curve. And with interoperability built on open standards, network convergence has never been simpler. Intuition also helps you grow your business. Flexible go-to-market options let you reach more customers, while unmatched waveform performance and intelligent bandwidth allocation set a new benchmark for efficiency. Intuition, the ground segment reimagined, simplified, and elevated.
All right, thank you. Let's get into it. And as a reminder, this session is being recorded. And so let's kick off with a quick pulse check on the industry from each of the panelists here, if I may. What would you say is the single biggest force shaping your investment or business outlook right now? Is it macro conditions, government spending, technology shifts, or something else? And Mark, if we may, let's start with you.
Well, that's a pretty easy one. I think the answer to that question is Donald Trump. He's the answer to a lot of questions at the moment. But yeah, the our industry and the outlook for space has very significantly changed during the course of 2025. Defense, particularly in Europe, very much in focus now that we've gone through, a round of increases in defense spending by the European governments. That there's now €1 trillion of budget in that market, with a very significant need to effectively wean off US capability and create sovereign capability in Europe. So this has created a massive tailwind, and that's the biggest driver that I'm seeing at the moment.
Plenty of questions to dig into that a little bit later. Kirk, how about you?
Yeah, so I had internet connectivity issues there, but but I'm glad to be on. So I had to pull up my Starlink to not just kidding. But no, I would say the number one influence for us, it continues to be how governments are thinking about investing in space. So piggyback on what Mark said, that's not just obviously a U.S. phenomena, but it's a global phenomenon, and I think we're seeing that across most countries in terms of what they want to invest in from a space perspective, and we're seeing obviously big programs in the U.S. and a lot of activity in companies trying to position themselves for things like Golden Dome. I think that's going to be a big driver for how space-based assets will be acquired, not just for Golden Dome, but how they will be acquired for other programs as well. So there's a big shift, and it's been coming, but now it's accelerating in terms of what's the risk tolerance from a national security perspective to acquire commercial companies, commercial technologies, and from new entrants. So we're excited to see that, and it's providing a big opportunity for our portfolio companies and investors like us.
Thank you. Theresa, how about you? Is Spire also feeling the ripples of the Golden Dome, US's missile defense project?
Well, I mean, of course, anyone who's in the US in the space sector is going to be paying attention to that. But I think I would echo what Mark was saying. You're probably going to hear that from everyone, that the interest from governments in defense tech is really strong right now, and I think is driving a lot of what is happening, and that includes what is happening in the space sector. And I'm going to focus particularly on Europe in this instance. I mean, we had the Ukraine war really showed everyone what commercial space can do in this kind of scenario, whether that's related to communications, whether it's related to Earth observation. And I think what you're seeing more recently is a lot of jamming of communication links, a lot of high profile instances of GPS jamming happening that is not just in Eastern Europe, but as well as the Middle East. And so you're also having a greater interest in other types of data collection from space, talking specifically about radio frequency or electronic signal capture. And I think the other interesting thing is that you're seeing a lot of interest in data, in the infrastructure to create unique and new data sets, as well as to be able to analyze and understand those data sets, where you're talking about AI and ability to compute and run models. And I think that's making deep tech and hardware something that is very interesting right now for companies that have unique capabilities there.
Thank you. And Masashi, how about the perspective over in Asia?
Similarly, I think how the government takes the priority, which kind of technology government takes the priority is kind of really important for the private capital as well. So I would say triple P, like a public-private partnership in finance, is very much important. And particularly in which domain government invests is very much important. And then here, similarly, public really contains the meaning of national defense or the national security as well. So I really that it has a very much bigger impact on the investment appetite for the private capital, which government really invest in. And then private sector really cares about the which kind of technical domain governments is viewing. And also, government can be really kind of resilient on taking risk for the early stage startups, kind of fostering. So, private capital's perspective, we can just wait and see how the government will develop the entrepreneurs and the seed stage technologies, and we can just kind of foresee what kind of technology domains will be a kind of mainstream for the next decade.
Yeah, so I'm getting plenty of optimism there from all of you, and driven by the increase in government demand. Mark, Seraphim tracks quarterly space investment levels, and you're nearing the release of data for the third quarter of 2025. Can you give us a sneak peek into what to expect there?
Yeah, expect new records to be set, I think, is as far as I can go. We're releasing it next week, and I've been told by the team to not reveal anything until our formal date of release. But what we've seen in previous quarters this year have accelerated.
Okay. Well, what about the valuations that you're seeing in your day-to-day as a space investor? I understand that they're rising, but are they rising on business fundamentals or froth?
Well, certainly our experience. I mean, we invest right the way across from seed right the way through to growth, and we're investing globally as well. And the key thing that we've witnessed is that there has been a definite uplift in valuations across the board, and we really sort of put the root cause of that down at AI. I think that the AI companies have led to a sort of ever increasing valuations. And I think that that is now filtering through to other deep tech sectors, and we're certainly seeing it across the board in space.
Okay, so how do you balance, the optimism for the sector with discipline when competition for deals heats up? Are you seeing a more, a frantic market out there to get to those deals?
There's certainly a lot more interest in these deals. There's more investors at the table. There's a lot of investors now that weren't looking at defense a year ago that are now interested in this market. Dual use is a relatively attractive way into the market. So we're seeing a whole range of new investors that are involved that is certainly leading to more competition. Like most investors, we're trying to remain disciplined about the valuations that we are prepared to pay and the sort of stakes that we're taking in businesses, which has already led this year to us, not participating in companies that we would otherwise have liked to have done.
Huh. And is that something that happens often? Or is it,
No, no, I think in the past we've been able to sort of negotiate and sort of bridge gaps around valuation. And really this year, I think is the first year that I can remember where we've been challenged on that front.
Interesting. Okay, thank you for sharing that. Kirk, what are you seeing from your private equity vantage point? Has the interest rate environment influenced pricing discipline, and are competitive funds driving multiples up again, or are we still in a more rational market?
Yeah, I would say that from a investor appetite perspective, rewind 18 months ago, space and defense tech was, an idea, but it wasn't one of the best ideas for institutional investors, right? Broadly.
Mhm.
And I think this year, in the last 6 months, defense tech and space tech is, if you look at across various large institutional investors, that's one of their top ideas, right? So, and I think that's really changed um, the ability for companies to raise capital, to um, find partners, to make acquisitions. It's really changed the environment pretty dramatically, and you're seeing companies in the space and defense market, access the public markets again. I think it's created a really interesting environment for companies that have great business models and have a market opportunity and to use the capital markets to fuel growth. So I think we're really excited. We're really excited about that as a firm at AE Industrial. I think the interest rate environment, I think that has obviously impact on the broader financial markets. The rate cuts, recent rate cuts, and the expected rate environment obviously helps overall, from an investment perspective for high growth and earlier stage companies, and space and defense tech are obviously beneficiaries of that. And that has created some increase in valuation. But I would venture to say that we're still in the early innings of what we're seeing as a long macro super cycle for defense tech spend and space tech spend globally. And you're seeing a massive increase in the spend overall, and you're also seeing a market share game where you have a disruption happening, where you've had in the US, right, history of a consolidation of large defense and space primes take the large share of the pie, and now they're being challenged, right? And I think that's they'll still have their piece of the pie, and that piece of pie might stay the same size, but because of the overall pie is getting bigger, I think that allows both types of the market to thrive. And I think that's driving a lot of corporate strategic activity, and I think you'll see more of that over the coming months.
Interesting. Very good. Thank you. Theresa, Spire's $241 million divestiture eliminated debt and freed up capital. Are you seeing greater investor focus on profitability and capital discipline across the sector these days?
I mean, I think at the end of the day, as a public company, you need to show financial sustainability, and you need to show that you're running a well-run company that is going to be there for the long term. So I mean, I think that matters. I think you see as companies are hitting profitability metrics, that has a reaction in the market. At the end of the day, I think as everyone has mentioned already, there's so much of government budgets going into defense tech and space tech at the moment that there's also a lot of interest in growth and a lot of idea and expectation that space companies are going to get a piece of that pie, right? Like in Germany, we've seen 35 billion going to space tech specifically in the next 5 years. You see NATO having a commercial space policy. So I think there's a lot of interest in growth and how companies can capture some of these big contracts and build backlog. And that's also as interesting as, long-term financial stability and viability of a company. They both absolutely matter.
Masashi, do you see similar valuation dynamics in Japan or Asia's emerging, space ecosystem?
Yeah, actually, so while globally, I understand that there was kind of decline in the investment kind of momentum. That said, but in Japan, we have been kind of experiencing the positive movement for the investment in the last 1 to 2 years. And then in terms of valuation, we actually have gotten a huge amount of investment from the government end. One is Space Strategy Fund that recently Japanese government, actually JAXA, has launched last year. And another one is Space Security. How can I say that in English? Space Security Vision. That is actually being planned by the Ministry of Defense. And each of them actually plan to secure the budget for the $7 billion for each. So it is actually a very much big amount for the private sector to get the early stage funding from the public sector, and it actually induced more kind of interest from the private sector, private funding as well. So in that sense, there is a huge appetite from the private sector growing to kind of invest more money to the entrepreneurs and the startups to get higher valuation for those companies. If there is any kind of details question about the Space Strategy Fund, I can come back to it later.
Yeah, well, no, absolutely. Yeah. And just kind of broader picture, and we've alluded to this, but the researchers at Atlantis Mason estimate that governments spent more than $100 billion on space in 2024 across both civil and military. And yeah, the appetite there just seems to it seems to be growing, as space becomes more strategic amid shifting geopolitical priorities. And I think it'd be helpful if you could outline what that's designed to achieve and how it's changing private sector dynamics in Japan and internationally too.
Sure thing. Thank you, Jason. So the Space Strategy Fund, it is named SSF, and then it is actually launched in last year, FY 2024, and then this is actually the second year. And then JAXA basically plays a role of as a fund manager. And then just to add on to that, our SpaceSide president, Masashi, is actually serving as the program director of it. And then actually the fund, structure-wise, the fund actually covers four main domains. One is space transportation and satellites like constellations and space explorations, and also common technology development through cross-sector technologies. So in total, the $7 billion US is planned, as you mentioned. And the first year, actually, we got $2 billion US set aside for the first year. And this year, as second year, we actually have the same amount. And for the rest of 3 million, we actually have not confirmed yet. It's not officially secured yet, but we expect to have it in the coming years. And then the main purpose of this fund is not to accelerate the JAXA's technology capability. Besides, the main objectives is to foster the technical capability of private sector. And particularly, startups is one of the targets of the government to foster their TRL. And then actually for the first year, as I mentioned, $2 billion US was set aside, and 22 program was actually planned. And there were actually around 130 applications. It's kind of high number, right? It was really higher than we had expected. And for this year, we do have 24 projects. So I expect that annually we do have that amount of numbers of projects for the coming years as well, like over 20 projects and over 100 companies applied to it. And it actually induces more startups to kind of try to get that amount of money. So from private capital perspective, it is very helpful for venture capital, for example, because I mentioned in the beginning, basically, it is very hard for venture capital to take the risk in the very early stage. But this strategy fund if the company actually had a good view on the forecast of the promising technologies. So from VC's perspective, if the government supports those entrepreneurs or startups, we can just share the risk with the government and let the government to invest in them first. And afterwards, we can just rely on the government judgment and add on to those kind of flows of the investment afterwards from the private capital.
Got it. And yeah, I'd like to bring in Mark and Kirk in for this one. Because we're seeing many sovereign and defense-driven funds set up, particularly in the Middle East. Do you see those programs amplifying or crowding out private capital in general? Mark, maybe this was more
Yeah,
for
I'm
you.
happy to jump in first. No, I think it's really amplifying because in many cases they're a customer as well as an investor. So I think in most cases that sort of comes in the same relationship. So it enables you to have a experienced investor on the cap table that is well integrated with the customer. They know how the customer works. They know what the sales process is, and they're best positioned to be able to help you through that process. So these investors are very rarely lead investors. So they're looking for the private sector to lead rounds, and then they will come in alongside. So we think that this is a really significant welcome addition to the market, as all of the nations around the world are looking to determine which parts of the space ecosystem that they feel that they need sort of sovereign capability over, and which elements of that they're happy to use international capability. So I think that the sovereign wealth funds have got a strong part to play in that, and we're increasingly seeing them in rounds. And I believe that during the course of the next few years, we're going to see a very sort of significant increase in the amount of money that's being deployed by these sovereign wealth funds. I think we're at the beginning of this growth curve when it comes to sovereign wealth fund engagement in this market.
Thank you. Yeah, it's interesting that that it's also comes on, and it seems to be increasing nationalistic policy signals from governments to be more, inward looking. Are export control and geopolitical frictions affecting cross-border syndication and international partnerships today, or is it not really an issue? I don't know, Kirk, do you want to take that one on?
Yeah, just and I'll answer that, come back to that question, but I would say a couple points. One, I don't think, and you made the point earlier, right? Governments are still underspending in space, is my view, right? If you don't have your own capability or a way to access space, um, then you have a severe disadvantage as it relates to to defense and the future economy. And I think um, that has been we've seen obviously encouraging signs of that, and a massive wake-up call from Europe and more broadly. But even in the U.S., I think we're still under investing in certain areas around space. So I kind of view the sovereigns and even the private public partnerships within the U.S. as a positive influence, where we can leverage each other's strengths, right? Like we're at the private capital side, we know how to structure deals, we know how to find companies, we know what companies are credible and can scale the technologies that the customer needs, and obviously the customer can provide a different risk tolerance, and as Mark said, the government can be the customer to help provide that proof of concept and that product market fit to get it going. So I think that's really important. From the export side, to answer your question, I think there are obviously some ITAR restrictions here in the U.S. and what we export, and what technologies. But there's also plenty of technologies that don't have those restrictions that we can leverage in partnership with European customers. For example, on the satellite side, you've seen companies like Aloft. You're seeing other satellite companies that are able to provide a satellite bus. Usually doesn't have like an ITAR restriction. It's usually on the sensor or payload side that tends to be the more sensitive technology. A launch vehicle, right? At Firefly, they have a partnership with SSC and with Sweden, where we are building a launch pad for them to launch alphas in the future, right? And we just announced Firefly announced a partnership with Japan, where the same thing, right? Where there's maybe a way to accelerate the country's sovereign capability for launch by leveraging technology that U.S. company or another company across the world has built, and be able to provide that. So there are obviously some restrictions, but there are ways to provide technology in a way that doesn't cause any of those issues.
Got it. Thank you. And Theresa, we've seen European and UK demand signals strengthen, of course, as those regions look to build sovereign capabilities and, like I said earlier, reduce reliance on US defense spending. How is that shaping Spire's focus between the US and Europe? And I'm keen to learn more about how you're leveraging commercial data and technology to support government and defense missions through, dual use capabilities, which is all the rage right now.
Yeah, and I mean, I think the whole discussion of sovereign capabilities, it's definitely something that we hear, and we see governments caring about. And no question, especially since the Munich Security Conference and everyone got much more worried about being able to rely on the United States. And I think there's an aspect of this that is about control and about seeing that you have local presence and management team and control, but at the same time there's also the aspect of economic growth and technology capabilities being built locally and the workforce being supported locally that is tied up into that. So a lot of it does have to do with this question of, are you hiring local people? Are you manufacturing locally? If you talk about the UK, they have security and growth as kind of dual focus areas. So when you get outside of the United States, that aspect of doing things locally starts to matter, not just around sovereign control, but also what you're doing to contribute to the local economy. And when it comes to dual use capabilities, you can kind of think about it in two ways. Sometimes people talk about it and they mean working with commercial companies for defense capabilities, and commercial companies who are not generally thought of as fully focused defense primes. And so from that perspective, I think absolutely, it was mentioned by one of the other speakers, there is a much greater interest from the United States, and it's been talked about a lot, to work and partner more closely with commercial companies that are not just the defense primes. And I think we're starting to see that in Europe as well. And then the other piece of it is, how are you taking infrastructure or data sets that you can then use for defense purposes, or you can use for civilian purposes, such as emergency response, such as weather forecasting and prediction, or climate related measurements. And I think when you have very constrained budgets, we've seen a lot of announcements about increased budgets around defense, but at the same time, I think a lot of these governments are still trying to figure out how they actually pay for that. And so dual use is a very clear way where they can also, talk about, we're doing things for climate, we're doing things for weather, we're doing things for emergency response that impact civilians in their everyday life, at the same time that they can use these data sets or this infrastructure for something defense related. And it makes the case in the budgets easier. And I think that's something that matters in particular when you're outside of the United States. And we do those things, again, with our infrastructure. You have one piece of infrastructure, but you can collect data sets using the same, sensors and hardware even, that go to weather forecasting, or that go to GPS jamming detection and geolocation, and that's definitely something we hear everyone caring about a lot.
Mm-hmm, mm-hmm. And there have been some big announcements, but Europe has long lagged the US in defense procurement and late stage space financing. What needs to happen to attract more growth stage capital? Is it structural, cultural, or just a matter of time even? Mark, I know you have some thoughts on this.
Yeah, this has been a sort of a key issue that's plagued Europe for a long time, and it's still not fixed. What we've seen is that we've got great universities, we've got great entrepreneurs, we've got plenty of capital to finance businesses through the earlier stages, and as soon as we get to the growth stage rounds, there's a dearth of capital, and these companies are then having to look further afield to access capital. In many cases, that leads them to becoming US companies, and we see a drain of great companies that then scale abroad. So that is well recognised. One of the ways that this is being addressed in the UK is through something called the Mansion House Accords, and this is really identifying pension schemes to start investing into this asset class. So here's a frightening figure. In the UK, for every £14,000 saved by pension funds, $1 goes into venture. Whereas in the US, for every $400 saved by pension savers, $1 goes into venture. So a very, very significant amount of money is aimed to be unleashed by encouraging these pension funds to start investing into growth stage companies, private companies. So there's been a commitment in the UK to lift that to 10% of these pension fund assets. So these are defined contribution pension schemes, with half of that going into UK companies to support growth in the UK, half of that going to growth stage companies internationally. So this is a program that's been very successful in Australia and Canada, and has really led to very significant growth in those economies on the back of that. So this is something that is just starting in the UK at the moment. We're just about to see the first phase of that happening, which is ultimately going to bring billions of fresh growth capital to be addressing this gap. So the timing is absolutely perfect. I believe that there are other structural initiatives that are going on across Europe, led by the EU, EIB, and EIF, that also recognise the shortfall in growth that they're looking to sort of plug those gaps as well. So I believe that the timing is now for a sort of resurgence in the volume of growth funding that's available. This is across the board, not just for space, but given the focus around defence and the important part that space plays in that, I believe that space is going to be a major beneficiary of these new schemes that are being released around growth stage investing.
Thank you. Anyone else having to add to that, and just on the the disconnect between the investment scene in Europe versus the US?
Yeah, the only thing I would add just quickly is that the valley of death, so to speak, between early stage companies and then to growth equity to mature company, that is not a problem that's only seen in Europe. In the US we've seen that as a pretty tough problem, right? For specifically in defense, where we have really good at the early stage cyber stratfi type of funding, but actually finding a customer and scaling that technology to get into the customer's hands at scale and find the capital to actually provide the support is actually a very difficult problem that we in the US, I would say, we have not solved. And I think there's some obviously some exceptions to that rule, right? Obviously, like SpaceX, but they had Elon Musk, right? Anduril, right, is trying to solve that issue, but it's like Founders Fund gone all in on that. It's $1 billion. They're pouring $1 billion plus into that. It's a bazooka capital type of strategy, right? So there's like exceptions to the rule, but like in terms of finding great companies that have great product that customer actually wants and finding that capital to actually scale is like it's actually a really hard problem here in the US, and we're trying to help solve that, but it's plaguing the overall environment from meeting its potential.
If I could just add, this is where government as an anchor customer really has a role to play, and where it can start to unlock private capital in that area. Something I think the whole sector talks about a lot and tells government about a lot, but I think it does have an impact on this issue.
Yeah, I also think that this is where the sovereign wealth funds are also looking to step in. Again, using UK as an example, the National Wealth Fund, the £28 billion fund, during the course of the last year has had its remit changed to focus on defence and to provide growth funding in this exact area. So I do believe that there are changes underway that are going to be helpful. The other thing, of course, is that the public markets have been largely closed for the last couple of years, and this is the next group of natural investors that can provide scale capital to companies as they're scaling up. We've just seen the window opening during the course of 2025, particularly in the US, with 3 space companies already having had successful IPOs, and we expect that there are many more to come. So I think that the public markets coming back, there's definitely an appetite there. That's been proven by the success of the recent IPOs. But I believe that there's more to come on that front.
perfect segue to talk about exits. So yeah, with valuations rising again, we may be seeing return of M&A momentum, and like you point out, Mark, several listings this year already. But how does the panel see the exit landscape evolving? Are IPOs truly viable again, and what does the company need to do to prove before it's ready? Kirk, do you have anything to say on that?
Yeah, I mean, I was obviously part of the Firefly IPO, historic IPO, largest space defense tech IPO in the last couple of decades. Right, so I think it does show. And I referenced this earlier in my call or in this conversation, which is that the institutional investor appetite for space and defense tech businesses is at an all-time high, right? And I think it is a reflection of that this is one of you have AI, you have all the different parts of the sector that support AI, and you have defense tech, space tech, right? Those are top ideas. So I think that's allowing companies to access the public markets where the last few years there was no access. For the broader IPO market was closed, but specifically for space and defense tech, it was really closed. So I think that's allowing companies to access the broader capital markets in a way that we haven't seen in years. And I think from our perspective and from my perspective, that's a very encouraging sign. It's going to allow companies in that series, to Mark's point, to Series B, Series C, Series D financings to convince investors that there is an actual exit opportunity for them in the public markets. And I'd say that the fallout of that is going to be also the big strategic buyers looking to build scale to go public. So you're going to see another ecosystem of companies that, there's plenty of startups out there who aren't necessarily going to be a public company someday. They're not going to be able to get to the scale and breadth, but they will be great exits for venture capitalists because they'll be able to be acquired by some of these larger companies that are able to get to that scale to go public. And I think for you to get to that point to go public for a company, it's really about can you be the next prime, right? Can you be the next company that can win $1 billion plus program, right? And provide that scale for investors to get behind, because they're looking to invest in billion dollars companies, not hundreds of millions of dollars companies. So you have to be able to prove that you have the team, the product, and the capabilities to go scale to the growth opportunity. So that's, again, very encouraging. I think you're just obviously seeing more of that in the future, just given the success of, as Mark said, of these IPOs. But yeah, we're super excited about it.
If I could just build on that, Jason, there's a whole new market that exists today for exit, which we relate to secondary sales. The largest private liquid company in the world is SpaceX. And what we are now routinely seeing is the top names within the space market globally, typically those companies that have raised more than $200-400 million. There's a pretty deep liquid secondary market for those companies. And we're seeing many VCs taking advantage of that at the moment, and we believe that is a market that's here to stay. But I absolutely agree with Kirk around the M&A market and how we're going to see that growing during the course of the next few years. There's just this giant defense budget that needs to be invested. This capability and technology that's available in smaller companies, but is going to access that budget far more efficiently as being part of a larger organization. So defense has always been relatively acquisitive. I think that we're going to see a defense M&A boom during the course of the next few years that I suspect that many of our portfolio companies are going to play into.
Thank you. Masashi, what's the scene, the exit scene look like in Japan and maybe Asia, as that ecosystem evolves? Are we seeing more M&A or IPOs or something else, something that's different from the US, Europe, and elsewhere?
Yeah, so I'm not very much familiar with what's going on in other countries in Asia. So particularly, I would like to talk about Japan. So
Mhm.
IPOs is actually the mainstream of exits for the startups at this moment. So we have had around like 6 companies which went public in the last 3 years. So annually, we do have 2 companies going public since 2023 was actually the very first year of the first space IPO, which iSpace has done with it. And then I think many of the follow-up company followers of the startups, we actually have 110 startups here in Japan from space. But I think many of those are following those 6 companies. So many people are kind of thinking about like, exiting as IPO. However, I think there is a different kind of trend might be coming over. Because I have seen that there are some larger corporations are getting into the space market from the other industries to support space companies. I think one of the good examples that many people may be aware of is Toyota is actually dealing with the space technologies. And one of the examples of them is investing into a launch company in Japan. So I think as industry grows, that kind of cases will increase. And in the long run, those large corporations may do some merger and acquisitions with the space companies to kind of enhance their space technology rather than doing by themselves or in-house. And then on top of that, I also expect that some of the leading space companies who are still in the kind of early stage at this moment, once they kind of get bigger, I think the grown big corporations, space corporations, may take the way to the merger and acquisition as well. So, but
Interesting.
that says still, like IPO is still the mainstream in Japan, though.
Yeah, yeah, interesting. All right, well, something to look out for. Okay, so the industry has matured to a point where sophisticated private equity, infrastructure funds, sovereign investors are all now active in space. But let's turn to where the next major wave of capital might come from and what's likely to drive it. And this goes out to everyone. Are the most investable areas over the next few years inevitably tied to dual use technology, or is there still room for a purely commercial play? Mark, do you want to start with that one?
Yeah, well, I think that the commercial side of space has not really had much of a focus in recent times because of defense.
Mm,
But quietly, what's going on in the background is all of the big management and consultancy firms, the KPMGs, the Accentures, the McKinseys, what they've all been doing during the course of the last couple of years is standing up big space teams. And what they're effectively doing is they are going to their customers, and their customers are the biggest customers in every sector, and they're asking them about what they're doing in space. And invariably, most of them are saying, not a lot. And they then show to them, the 2 or 3 data capabilities or communication capabilities that are available to them right now that could
mm,
add value, help them grow their profits, save costs, improve their services. And then they also demonstrate what's on the near-term horizon. And these are companies in the automotive industry, the oil and gas industry, the real estate industry. This is really happening, across the board in a very systematic way. So you've got that happening, and then at the same time, we've got AI that is now making it easier for for these companies to actually consume this services and capability from space. Previously, the commercial customers were those that really, like defense or like oil and gas, that would have specialists, analysts that were able to interpret the data and incorporate that into the informational systems that are used. But now, thanks to AI is really an enabler for any company in any industry to be able to really start to effectively use this data, use it and draw it into their day-to-day operational systems, decision-making. And that, I think, is going to be a very significant driver for commercial opportunities in the space market, and one that I think is sort of flying below the radar at the moment. But believe me, it's happening on a commercial scale. I'm now spending a significant proportion of my time not attending space conferences, but attending conferences from other industries talking about space. And there's just a massive amount of interest there from the leadership of these companies, largely because the McKinseys and the KPMGs and Deloittes are speaking with the senior management and sort of directing their strategic thinking in this area. So that, for me, is going to be one of the big growth areas over the years ahead. And we've been really carefully thinking about how we position ourselves to take advantage of that.
Fascinating. And it's almost time to bring in audience questions, but I'd like to just extend that question to the other panelists if they want to answer it, and just, yeah, AI and any other technological capabilities you see really changing the game for the space industry in the near term.
Yeah, I'll let Mark evangelize on behalf of all of us to all the other industries for the why they need space. But yeah, I couldn't agree more. We're not focused that much on commercial because we are sort of focused on national security and the applications of that. But I would say the commercial space market has grown. It's just SpaceX has sort of eaten up a lot of that growth with Starlink, right? If you kind of look at what Starlink's growth, it's pretty tremendous, and how they're disrupting. I think disrupting telecom, and you see the deal with AST signed with Verizon. Verizon and AT&T are having to think about space as how that affects their industry in ways that I don't think they thought even a couple of years ago, right? So I do think the commercial market will be an interesting opportunity. For obviously from a communications perspective, and AI will help from a data perspective. I think that's been one of the most disappointing parts of in terms of like commercial market in space, around like the data that we're receiving from constellations and imagery. How do we use that from a commercial perspective? And I think obviously Theresa's in the middle of that and starting to see, seeing progress on that front. But I think that's probably one of the areas that we haven't seen as much growth as I think the market had expected maybe 5 years ago.
What I would just throw in is, I think defense interest is not going away anytime soon with the geopolitical situation. The whole AI thing, I mentioned a little bit earlier. I do think that there is a great desire for unique data sets and new data sets. And that really means hardware and deep tech, whether that's, the ability to deploy new sensors and on satellites, whether that's other things related to drones, whether it's related to having, compute and processing ability to run AI models. I think, hardware is having a bit of a moment right now. Whereas in the past years, it's been all about software, been all about software as a service. And right now, having the ability to deploy unique infrastructure that can collect unique data sets, I think, especially with AI, out there, is something where you will start to see, and you are seeing more and more investment and appetite and ability to use all of those data sets more broadly.
Cool. Masashi, anything to add before we move to audience? Yeah.
Yeah, just from my perspective, coming back to what Mark earlier mentioned, I totally agree with that like AI or any cutting technology is actually an enabler to connect space with other sectors. And then from commercial sector perspective, when it comes to like a sovereign constellations or sovereign whatever for space, I think just relying on your own government is kind of risky in a way. Of course, defense actually secures a big amount of budget, but if you solely rely on those budget, such kind of like a monopolar strategy of commercial kind of sales is sometimes very risky because your government may change your kind of policy perspective. So in that sense, in terms of how you secure the commercial viability, you have to have the diversified sales or the revenue stream. So in that sense, cross-industry or cross-border sales stream is very important. So in that sense, how you get connected with other sectors or how you get connected with other countries is very much important. In that sense, I think cutting-edge technology such as AI is a very good enabler to get you connected with other sectors.
Very good. Thank you. Perfect. Okay, Dan, over to you. What questions do we have out there?
Like it's my first Zoom call. Hi, everyone. Yeah, thanks to everyone in the audience who sent in a question. I'll have time to pick just a few of them. And I want to start with something from Brianna Sparacino, who asked, what do you think are the biggest knowledge gaps between space startup founders and the finance or investment professionals in today's climate? Some of you touched on this a little bit, but I'm curious if there's anything that stands out. And I suppose this is for anyone and everyone.
I'm happy to jump in first. Yeah, you know, the common issue with space founders is they show you a deck that focuses on the technology and what it does. They don't focus on what the business is and how it makes money. And really, you know, they're speaking to financiers that are interested in talking about making money. So often you've got a sort of technology conversation without the here's how we make money element. And you know, this is something that needs to change. I think the other thing is that fundraising is a very important success factor in the space market. Companies need to raise $200, $300, $400 million in order to succeed in this market and reach profitability. So being able to raise, you know, annually very significant sums is really important. So you know, it's what the onus is on the entrepreneurs in the space market is to become financially literate in terms of being able to talk to investors in the right language, but also positioning their companies, you know, about how they're going to make profits and what they're going to be worth and how they're going to grow, rather than spending 99% talking about a technology.
Yeah, I think the thing I would add is there's often a disconnect between the vision that the founder has and the actual reality of what an outcome would look like, right? Where they might have a great idea about one part of the ecosystem, like a new cool propulsion system or a new interesting sensor. It's a great idea, but it's not a billion dollar idea, right? It's a couple $100 million idea. And that's fine. That's great. That's a great business, a great outcome. But that means you shouldn't be raising from certain types of capital at certain valuations, right? You should be raising a different type of capital that aligns with the vision that you have, or you need to change your pivot and change your vision, right? So I think there's a little bit of a disconnect in the space market where we see a lot of companies who have a really interesting like component idea that it increases performance of a rocket or a satellite or whatever, but that's not a venture like idea, right? So I think that's what I would probably recommend as advice for founders. Just make sure your vision is aligned with what actually the venture community wants from an exit perspective.
May I jump in?
Please.
Yeah. I think this is pretty much kind of like similar to what Mark earlier mentioned, but in terms of like business forecast, entrepreneurs like very much often lack the sense of that. But particularly, I would like to kind of refer to the forecast of the government policy scenario. So as we discussed in this session, the government budget as well as defense kind of procurement is very much important for the space companies. And then if you are the space entrepreneur, you really want to have a sense of foreseeing how the government will do what, and then what kind of budget will be allocated for what technology or use cases. That is very much important. So deep understanding of the policy is always very important, particularly for the space entrepreneurship.
Great, thank you. I would be remiss if I didn't get at least a second question in there. We talked a little bit about the focus on defense and security versus purely commercial contracts and where the money is now and where the interest is now. But Ed Case asked us to discuss longer term markets like, say, lunar infrastructure, and when something like that might become interesting to investors, if anyone has quick thoughts.
Quick thought. Okay. Yeah, it's already interesting, right? You're seeing companies like Firefly, obviously landing on the moon earlier this year, and obviously it's driven by NASA, but that's also driving other companies like an Interloon or even what Blue Origin's doing, right? And they're looking to the lunar, to put lunar infrastructure and the potential lunar economy and benefit from that. So I think you're seeing some interest from new companies to provide technology to take advantage of what we believe is coming from a lunar perspective. So yeah, I think it's still early, but we're seeing new companies come up with great ideas and try to be positioned for that future opportunity.
If I may, I also want to add on to that. So I think in Japan particularly, there is a good investment appetite for the lunar exploration domain. And then I think it is not because it's long term or it's about moon or something very interested. Rather, the reason of this appetite is because it's a part of Artemis program. So if we talk about why the main reason why private capital invest in space tech is because the government invests in that domain. So in that sense, Artemis Accords, Artemis program is a kind of very strong reason for private capital as well to kind of trust what government is doing and follow the policy perspective.
Great.
stuff.
Well, thank you. Yeah, I'll send it back to you, Jason, because I realize I took more time than I had.
Unfortunately, we are out of time, but thank you very much. Fantastic stuff. Thank you for the questions and to the panel for their insights. And thanks again to our sponsor, ST Engineering iDirect, for supporting this conversation. We'll continue covering these issues closely at Space News, and I hope you'll stay tuned for more reporting, analysis, and events. Until next time, take care.